Hang Seng is down once again, so that one is now seeing cuts of around 0.25%.
Well, China has been actually the biggest negative surprise of 2022.
It was a top-down beat from Coal India.
The Adani Group is exploring its stake sale in Adani Wilmar.
Yes, so it's a flat start on expected lines.
We've had a very sustained run from the end of March.
We had guided that by Q4 we will reach 525. I wouldn't be surprised if we reach it in Q3 itself.
Our guidance for this year looks to be 15% plus, that is 4,800 crores.
Well, this monetary policy comes amid a sharp spike in vegetable prices.
Inflation in July, we expect a 6.8% kind of inflation.
So 19,500 has gone on the Nifty.
Yesterday, there is a long list of blocks happening. And surprisingly, in most of the cases, the insiders or the private equity guys are selling out.
तो आज मैं दिमाग से नहीं बोलना चाह रहा हूं, मैं दिल से बोलना चाह रहा हूं.
Apple, Dell, HP have collectively moved the Ministry of Electronics and IT.
Points lower on the Nifty, and we have the mid-cap index, which is absolutely flat but with some negative bias.
Well, that was the day so far. Hello and welcome to Closing Bell. We are coming to you live from the CNBC-TV18 Motilal Oswal studio. I'm Dr. D'Souza. Joining me is Rima Tendulkar. In just a bit, we'll have Surbi as well, who'll be joining us in the studio. Well, Rima, it's been that sort of a day, right? At the start of today, we were saying that the Bulls will be happy to bat it out, get their eye in, wait for the big event that plays out tomorrow. And I think it's playing pretty much, to that sort of
script.
Yeah, that script, yeah.
No, absolutely, right? We spent a lot of the morning below the 19,500 mark, and now we've managed to climb above that level. So from the day's low, there has been a recovery of about 60 to 70 points on the Nifty, and the Nifty is now well above that 19,500 level. Look at the mid-cap index. The mid-cap index is now back in the green. Even the Nifty Bank, it's still underperforming, but it is off from the session lows. At one point of time, the Nifty Bank was down more than 400 points, closer to a 450-point decline, and now we're down close to about a 300-point. But all in all, it's still a very much ranged, a session of consolidation. It's just that the bias has been on the negative side. Quickly, to run you through some of the big movers. One of them is Dr. Reddy's fresh 52-week high. We'll discuss that in greater detail. Look at Tech Mahindra. Well, amongst all the large cap pairs, Tech Mahindra's numbers are the weakest, but its valuations are also the cheapest on the back of that. But Tech Mahindra, after its Q4 lows, post Q4s after weak numbers, the stock slumped. And since then, the stock has recovered 25%. And this is despite no perceivable improvement in their performance, at least in Q1. Autos are having a good session, whether it's M&M, Tata Motors, Bharat Forge's numbers look pretty healthy. Hero MotoCorp, though, has slipped ahead of its numbers. The problem is that many of the banks, the large cap banks, like an ICICI Bank, Axis Bank, and HDFC Bank, are all trading in the red. So even though the Nifty Bank has recovered from the day's low, it's still the rank underperformer. Hi.
Hi guys, I finally made it. We had a long session on who moved the market with Nimesh. We're talking about all these block deals that have taken the street by storm. Did you know? Almost 12,000 crores of blocks already done in the first 9 days of this month.
Wow.
Incredible,
Hectic activity. Promoters selling.
Who's
some of the
smarter?
PE guys.
Who do you think is smarter?
Now you're asking the tough questions. I was asking Nimesh just that
Do you
right
think
now.
the funds are smarter or the PEs and promoters? Who do you think so? Huh?
That's a tough one. But no, I think this time around there's a lot of... for Vedanta, you'd know better, right? Mr. Agarwal needs the money. He has his bondholders waiting for that redemption. Anyway,
that case is in its league.
That's a separate... Absolutely.
So
it's a separate case.
Ones? There's Vedanta yesterday. There was INOX.
There's DLF and...
Ganeshiko.
Yeah.
Ganeshiko's sphere. That's
more. So some of the private equity funds are winding up. That's why they need to sell. They need to kind of look at the redemptions. Who knows? Maybe Cipla. We're hearing so much from the promoters. So the short point is bankers are making money, and Nimesh is very busy. So what are we as we are tracking these block trades? But as you guys were discussing him on the markets, I think Nigel, exactly what we were saying in the morning, right? As long as the range can hold, we don't completely cave in. Yeah. This will probably go down as not such a bad day. It was looking very, very tentative at around 12 o'clock. So to quote Nigel's line, fighting to live another day. That's today's story. Just want to point out that the European Open has helped this recovery because those markets have completely brushed aside whatever we've seen, these banking downgrades in the US. The litmus test now comes in as we'll get inflation data from the US tonight. So let's see. That's the important global cue. And here, I think the problem for the banks is we don't know just how hawkish tomorrow's commentary is going to be. Yields in India have been moving higher. higher bond yields mean lower bond prices, which means lower treasury gains for banks. It's never good news. And perhaps some of that is already being priced in by the Bank Nifty today, the possibility of some sort of hawkishness from the Reserve Bank.
Well, that's right. Surbhi, though we are looking at the headline index, and I'll give you a couple of levels that we need to track out there, but the real action has been the mid-cap space. We're talking about the Nifty being down 50, 100 points or thereabouts. The mid-cap index, as we speak, that's virtually at the high point of the day. It's trading with a gain of close to around 0.3% as we speak. So the money is being made in the broader markets. But just to look at the headline index, well, we seem to be in this range because ahead of a big event, you normally see writers, they are the smarter money. So pull up the 19,500 call and the 19,500 put. Now, between them, the premium's close to around 110 rupees. So it seems that strategy is playing out. When you write both the 19,500 call as well as put, you pocket close to around 110 rupees. And then you're saying that maybe the Nifty should be in a bit of this band. So the range is on the downside, 19,490. That's the tighter range that I'm looking at. And on the upside, you'll have close to around 19,610 approximately. The crucial levels. Now, the Nifty levels, the 20 DMA is all important. We haven't got past that mark. So 19,650, that becomes a crucial mark on the upside. On the downside, though, the 19,296, that's an important mark. That's a recent low. So for the Nifty, that's the broad band. Once you get the RBI verdict, once you get the US CPI data, the hope is it breaks one way or the other. And the Nifty Bank, well, today it went, to the low as well of around 44,534. From there, we've seen a bit of a recovery. You're likely to cross the 50 DMA. It's very, very close to that mark. You would have thought once it broke that, you'd have been a little bit worried, but it's showing some fight from lower levels, both the Nifty as well as the Nifty Bank. So today, I would say, is not such a bad outcome. At one point of time, it was looking like we're likely to break low levels. But in fact, as we speak, a good recovery is underway. The big question is, for the final 60 minutes, how do you trade? Mitesh Thakur joins us to help us out with exactly that. Hi, Mitesh. Well, not such a bad day, right? If you bought the dip today, you would be quite happy. What's your view on the markets from here on? On an upper side, what are you looking at? What is the crucial resistance zone?
Really two things. One, I think, the market's recovery is definitely very strong and welcome. See, we got a low of around 19,460 and I'm actually looking at some kind of a movement which will be more of time-wise correction on the longer term scale. But in the short term, if we start breaking below 19,400, we could see 19,200 as well. So I think it's basically, to me, on a very wider term, appears to be a range of 19,200 to about 19,850. While on an immediate basis, I think it's 19,650, 680 on the upside to about 19,400, 420 on the downside. So that's the way we'll approach it. Trading is clearly more stock specific, and I have one buy and I have a buy, two buy calls. Ashok Leyland is something which is trying to break out of a sideways consolidation. So that's a buy with a stop below 184 or targets of 196. And BEL also is looking quite positive on the charts. So that's a buy. Keep the stop below 129 here. Look for targets of 137.
Okay, those were some trading ideas. Let's get chatting about PB Fintech. That's been under pressure on the back of a Macquarie note. Abhishek is standing by with the details. Abhishek.
Well, Rima, as you mentioned, Macquarie has initiated coverage on PB Fintech. They have given an underperformance rating with a target price of 560 per share, which is, a discount of about 30% to yesterday's closing price. In the report, Macquarie says that disruptor to the disruptor is going to happen. So the risk from Bima Sugam could actually be a cause of big disruption to PB Fintech's business. So the regulator wants Bima Sugam to be a UPI movement in the industry. Impact from Bima Sugam could be, lead to lower take rates as well as market share from FY25 onwards. So the question on target market potential and, POSP network actually remains a concern for them. Their FY27 earning estimate is 25% below the consensus estimate and 30% below the company's guidance as well. So valuations at a price to equity of about 48 times FY27 appears to be expensive for them. Back to you.
Okay, thank you very much for that. Prakash Diwan is with us on the show. Prakash, where do you stand on PB Fintech? This Bima Sugam is not a new development. We've been talking about the potential for Bima Sugam to disrupt the entire space, similar to UPI. But the markets may have digested this particular development. We need to see how it plays out. But when it comes to the financials, now Q1 numbers look pretty good. The company has reiterated its guidance that it's going to be PAT profitable this year in FY24. Where Macquarie is coming in differently is they're saying that we don't believe the long-term guidance given by the company, and their estimates are lower than consensus. So, it's a call whether you believe the company or do you think they're going to be underperforming. So, weigh in with your thoughts on PB Fintech.
Good afternoon, Rima. So, it's a tricky situation that this company, the stock of this company is in for investors. And I'll tell you a couple of reasons more which kind of confounds everybody. PB Fintech was supposed to be a very simple aggregator model where you could kind of, get to market all the insurance products very efficiently, low cost, this thing, no friction cost and all of that. But, that's not led to any kind of an incremental change in what they've been able to do. They are still range bound in that, on the top line and on the margins. Now, all these expectations that we are building, the worry is not about the P multiples that some of these new age businesses can attract, but it's that FY27, FY26 which scares us. The environment or the sector is so prone to legal changes because it's developing rapidly. It's evolving so rapidly that every day there'll be something new from a thought leadership perspective, from the government side, from the regulator side, and that makes things very difficult to anticipate a very linear kind of a growth for most of these companies. And look at how some of these companies themselves are growing into digitalizing their businesses, and that means that there'll be much more easier roles to play for a lot of these aggregators or sellers or resellers. So I don't think PB Fintech has a unique proposition that it could attract this kind of valuation. Forget the Bhima Sugam thing. That might take off. In fact, the government's ability to roll out these things is getting to be very convincing now. And that's why the fear is real and soon. So I think you should book out if you've not been able to see any kind of a great upside. There are far better businesses that are morphing and transforming themselves. Zomato, case in point, Paytm for that matter, delivery. I mean, there are businesses which have already started showing very clear trends of change, which are farly secular as compared to PB Fintech.
Okay, that's PB Fintech, one stock that's in news today. We've had some interesting result reactions, and I want to pick up on the drone company that really got the market's attention. IdeaForge is what we're talking about. It was a sensational listing. Stock went through the roof. Numbers haven't really gone through the roof in the first quarter. They've kind of struggled on margins. Margins were at 55% in Q1 of last year. They've come down to, I think, about just under 30%, if I remember correctly. Top line's also down. We did catch up with the management, and the justification was that it's a lumpy business, so don't look at it on a quarter-on-quarter basis. Overall, the management is still saying that on a full-year basis, they should be able to retain margins between 30 to 40%. They're growing their order book. Order book is now close to 190 crores. That's sort of the pickup that we had. Prakash, your thoughts? The stock is being punished for obvious reasons because the market really bid it up, showed it a lot of love in the IPO. What did you make of it? What do you think of this management and, of course, the stock itself?
So should we, this and some of the other smaller drone businesses that are also listed, whenever I look at it, I just think of one tagline. It says, make drones will fly. But whether the stock will fly or not is difficult, given the fact that it's a very small segment of services or products that is yet to kind of evolve. And let me tell you, all the drone manufacturing and selling that's happening is largely related to very low impact products. There's nothing very significant which can cater to either defense or logistics in a very major way as yet. I mean, you have some for agri services, some for some other, for photography and for recreation and all of that. But there's nothing which is very meaningful. So whatever these companies do is going to take a fairly long time. So till they become mainstream in terms of applications, I don't think the scale is going to be very good. And on the day of the IPO, I remember mentioning, if you're lucky to get an allotment, please book your profits at 180 times P. Things do look a bit stretched. So, that's where the setup is. And my sense is that it'll take much longer for these companies to be able to understood by the street, by investors. And I don't have much of a view on the management because it's too early to kind of gauge their performance and their articulation of the performance going forward. But the segment is challenging. So that's where you would need to kind of rationalize what you pay for it. And you will have to wait for more companies to emerge, for the ecosystem to become much more equitable to choose out of, rather than just invest into one company.
Okay, all right, got that, Prakash. By the way, just keep an eye out on the markets. Yesterday we were highlighting that Hindalco's numbers were not so bad. In fact, operationally, it was a rather good set of numbers. And in fact, just take a look at the reaction that we're getting. Hindalco is up close to around 2%. We spoke to the management. They said that the aluminium EBITDA per ton will improve. It will hold at around $700 per ton. Copper business from 500 crores, they'll start doing a run rate of 600 crores per quarter. And Novelis will hit that $525 per ton maybe sooner than expected. So explain why that stock is moving up. But Hindalco can do little to move the index. The reason that the markets have moved into the green is because ITC and L&T, both of them are moving up. So just get the intraday chart, or maybe we get a split screen up for you of ITC as well as L&T, both of them spiking up as we speak. And Reliance Industries is cutting its losses. That's the big boy in there. That's the big driver of the market. And with Reliance Industries cutting its losses, it's clearly helping the Nifty recover as well. Just take a look at that beautiful chart out there. Explains why the Nifty is back in the green. And just one more, Reliance Industries cutting its losses, on the verge of moving into the green. Well, for the time being, we'll slip into a short break. Maybe when we come back, Reliance will already be in the green, and maybe a couple of other heavyweights as well. For now, we have a recovery underway. So we'll slip into a short break. You come back, we'll get chatting with our alpha manager of the day. Harish Krishnan of Kotak AMC will be joining in.
This is Mad About Markets, and in case you're wondering why we keep talking about cricket, because it's the Indian cricket team which is the foreteller of what's to come in the Indian nation as well, Ritu.
We had it in the grooming episode if the beards were anything to go by.
Well, so let's talk about this. The composition of the team. The 1983 World Cup squad had 8 out of 11 people coming in from the metros. Come to 2019, the last ODI World Cup, we had just Rohit Sharma, Virat Kohli and a couple of others coming from the metros. Everyone else was from tier 2 and beyond. Is that what's happening?
That's exactly right, because we're talking about the
Bharat opportunity.
Well, this is a smart pullback. As Nigel was pointing out before we took that break, Reliance was making that move. Hindalco definitely has been the key gainer in the last couple of minutes of trade. And throw in some, there you go, Reliance just about 5 rupees lower now. Throw in some more consumer names, Titan, Tata Consumer, Britannia, all these consumer stocks, along with of course, ITC, they've all moved in the last half hour, helping the markets cause quite a bit. So not a bad looking screen now from the bulls perspective. Well, one stock that's managed to find a fair amount of green today is actually Dr. Reddy's. Let's pull that up as well for you and show you what the stock's doing right now. Now, perhaps one of the reasons it's moving higher is that Pfizer seems to be facing some trouble in one of its US plants. Now, how does that benefit Dr. Reddy's? Will it benefit Dr. Reddy's? Let's ask Ekta. Ekta, what's the thesis here?
Well, there are multiple reasons why the street is getting bullish on Dr. Reddy's. I'll start with one of the more news-related reasons, which is basically Pfizer's injectable plant seeing some amount of damage due to a tornado in the US. Now, a lot of analysts have done a lot of work, and they have indicated, for example, there are 12 critical products which are impacted due to the tornado damage, and the opportunity for Indian companies could be the tune of $50 million. So it's not expected to be that much. Now, in terms of Dr. Reddy's, they have 2 products which they are currently approved to manufacture in the US when it comes to these 12 products. So one will really have to see whether that opportunity is material or not for Dr. Reddy's going forward. But the street is probably a little optimistic because Dr. Reddy's does manufacture injectables and has a presence in the US markets. Now, separately, the US sales for Q1 were quite strong for Dr. Reddy's. They did beat estimates. The market share has risen in the US markets, excluding Revlimid generic, the cancer drug, which they have been selling in the US markets like other companies. So the US market rose besides Revlimid generic due to opportunities such as market share gains in key products as well as reduced price erosion. The gross margins for them expanded over 750 basis points year on year as well. And the guidance is that it will be between that level of around 56 to 59%. Separately, the street seems to be bullish on factors such as the improving outlook in the North American market, increased pace of launches in emerging markets, growth prospects in the domestic markets as well. The stock, remember, is already at a fresh 52-week high. It's seen a strong rally of around 45% from its 52-week low, and it's trading at 20 times 1 year forward if you include Revlimid generic and around 22 times if you exclude it. So that is an important opportunity that the street is tracking for the next couple of quarters as well for Dr. Reddy's. But remember, other companies are also benefiting from it.
Okay, thank you very much for that. Prakash, you want to weigh in on Dr. Reddy's and the opportunity laid out by Ekta?
I think Ekta's assessment was very candid, very thorough in terms of this. It's not just a piece of news, but it's a structural change in the US market vis-a-vis Indian companies, especially the larger ones, that's benefiting. And we've seen Dr. Reddy's for the last 15 days, the way the move's been so well sustained. What's going to happen is this is going to percolate to a far bigger universe of pharma players from within the Indian market. And I had pointed out even at that point in time, the way some of them have started finding pricing power come back or demand this expansion that's favorable for them. Divi's is what comes to my mind. I think it's still to run up to the extent that it deserves to and kind of get re-rated. So I would look at some of these larger players, but within that set, Rima, the top pick is Divi's even at this point in time. And within the mid-sized companies, we've seen how some of these pharma names like Syngene and all, for their own specific reasons, have benefited. But that's a trend which is kind of getting more broad-based with US FDA frequency and nature of inspections getting more favorable or benign at least. So I think that's where the thesis is. It could just be a flow, a series of such news flow that will probably corroborate that. But you definitely should be looking at allocating more money into these names or within the sector, whichever names you like.
Okay, all right. Prakash, I wanted your view on Bharat Forge. For the time being, we'll just run our viewers through what went on there. They came out with their numbers. On the top line, there was a growth of close to around 20%. However, the EBITDA growth was more than 25%, so telling you that there was some margin expansion as well. But I think what the street liked, and the reason the stock is higher, is because the management commentary was very, very good. They say that the new business worth close to around 200 crores was secured in the core business. They also mentioned that the defense order book is increasing gradually as well. Now, besides that, on the European operations, they have posted an EBITDA profit of around 51 crores. That compares with an EBITDA loss of close to around 14 crores. On the US operations, they said yes, it posted an EBITDA loss this time around, but they expect the US business to turn around by the fourth quarter. So that's on the US business, positive commentary coming in there. For the guidance on the whole, they're expecting the consolidated EBITDA to increase from current levels of around 16%. And for the standalone business, they say that demand environment is benign across sectors and geographies. Though stable demand and ramp up of new business, that's what's going to help them in terms of a top line growth for FY24. Put this together and it explains why the stock is higher by close to around 4.5%. Well, Prakash, what do you make of these numbers? Bharat Forge, rather good. And the commentary is something that the street likes. Your view?
So, Nigel, picking from what you mentioned, the key highlights or the key takeaways, historically, Bharat Forge was always valued for its automotive business. Now, that's getting a bit fractured or kind of, marginalized given the fact that other new businesses are developing far more rapidly. So you have the North American market that's kind of not been very consistent. Europe was slow. It's changed this quarter. Even within, the rest of the geographies, the auto business is not something which is where they've done too much of incremental value additional, changes. And that's why, the P multiples are always much softer. This company, in probably less than 5 years, to my understanding, will become a defense player than an auto player. It won't remain auto and, allied kind of a player. The defense business that it is getting into is far more value driven. It's lumpier, it's higher quantum of orders. They're not small orders that they execute because artillery and a lot of those things are very high value. And once it gets established within the Indian market, I mean, the global market opens up for a lot of the gaps that Ukraine and a lot of these, CIS countries have backed out of because of the war. So my sense is this is going to be a stock that will get re-rated majorly, not just on a EPS incremental basis, but on a P multiple side dramatically in the next 2-3 years. So I'm quite gung-ho about that. It's just that, the balance sheet also has to be molded to support that kind of a growth, which I'm sure we'll see in the subsequent quarters, but absolutely positive on this.
Prakash.
Okay, got that, Prakash. Thank you very much for joining in. Good listening in to you. And thanks for being with us on the show. You have a good evening. And we look forward to connecting again. Green on the screen. The bulls have managed to fight back. Nifty is now up 25 points. And, well, what do you know? We still have half an hour to go. So let's see if this gathers more momentum, because it's been a very, very quick-paced rise in the last half an hour or so. Mid-cap index up about 0.3%. Harish Krishnan, Executive Vice President and Senior Equities Fund Manager at Kotak AMC, is with us now on this leg of the show. Harish, thank you very much for joining in. I'm going to start with a very different sort of a debate and not going to ask you about stocks or a sector. It's a debate that we've been having here internally. A lot of this block selling that's going on, right? Promoters are selling, some private equity insiders are selling. And in a lot of these block trades, mutual funds have been buyers. So the big debate is whether all this insider selling is indicating some sort of a top for the market, at least, in the short term, or whether mutual funds are actually the smarter lot because they're buying, seeing a further potential upside. What would you say?
So, Surbi, as we all know, every trade has a buyer and a seller. And clearly, the longer term horizon, be it that of the promoters, be that of, say, slightly longer dated funds, which have horizons and mandates of 7-8 years, are the longer term holders. And in the market, obviously, we have all kinds of participants. At Kotak, we, of course, would like to think ourselves as reasonably longer term investors. So therefore, I think it is important to take into cognizance the fact that some longer term shareholders are giving way to shorter term horizon shareholders. And I think there is a message out there. But broadly, when we look at the overall context, generally we get a sense that market typically can absorb in a given calendar year or a given 12 months, roughly about 1% of market cap as a potential supply that comes through, before which the weight of the supply itself, kind of pulls down the overall market. At today's market cap of, say, roughly about 300 lakh crores, that's an annualized number of close to about 3 lakh crores, or on a monthly basis, close to about 25,000 crores. I think in the last month or 45 days or so, we've seen that kind of a monthly run rate.
Of course, this has come after almost 6-9 months wherein we didn't see any major supply because prices were a lot lesser than where they have in the last 3-4 months. So I think under 2-3 months of this steady supply that comes through, I think that in some sense itself will cool off the overall market from a pure liquidity point of view. Again, this also includes IPOs and potential QIPs, etc. that come through, which is more seen in the form of growth capital, which obviously is kind of useful for companies to augur for fresh capex and to look at newer streams of cash flows. So I would say I don't think there is anything smarter or dumber from a money management point of view. I think it's more a function that we are starting to see a reasonable amount of companies which possibly complement our entire portfolio. And at least here at Kotak, that's how we are looking at such opportunities in a very selective fashion.
Harish, afternoon. I know you guys are long-term investors, but how do you feel about the markets right now? Earlier today, we had Jefferies, Mahesh Nandurkar of Jefferies saying that maybe the Goldilocks scenario for India may not last because crude is spiking up, inflation has picked up, yields have gone up, and India has underperformed the emerging market basket in the last 1 month. But on the other hand, we had Morgan Stanley taking India's position to the top spot in emerging market. BofA raised the target price on the Nifty to 20,500 by the end of the year. So we're getting divergent views. Where do you stand on India? How do you feel? How comfortable are you at current levels?
So I think I'll add to the confusion rather than clarify it. If I take a slightly longer term assessment of valuations, India's share of market cap as a percentage of overall world market cap is at 3.35%. India's share of the world GDP from an economic activity point of view is roughly again in the 3.4%. And we all know that, say 5 or maybe this decade or so, India will be one of the few regions and geographies which will lead the world in terms of economic activity. Now, what that number is, it's debatable, and finally what India delivers is one has to wait and watch out. But I think there is a reasonable, expectation, and I would say a reasonable probability that India will lead the rest of the world in terms of economic activity. So therefore, if you look at that in context, are we overvalued? I wouldn't think so. I mean, we are in the fair value, possibly fair value plus zone, especially given the last 3-4 months of activity. But in the bigger scheme of things, I think we are still reasonably okay. Of course, as we know that, there are both structural factors as well as cyclical factors at play. Structural factors which benefit India are reasonably well known and well discovered, be that of our very strong demographics, our improving per capita income, our productivity enhancers like the digital stack, the fact that there has been significant investments happening on the infrastructure side. I think these are all reasonably well flagged off and are possibly long-term trends. On the cyclical side, in the last 3-4 months, as you read out one of the strategists, I think India did benefit from some cyclical factors, that of crude correcting from 120 levels to say $75 odd. You had the trade imbalance, which was on the monthly run rate at $25-30 billion at its worst. Last year, that has come down to anywhere in the 17-18 or $20 billion run rate, which is very manageable. And you also had an issue for foreign investors where they didn't really like China for various reasons. So I think a lot of these cyclical factors are likely to unwind. They are cyclical, and therefore there will be pluses and negatives. And as long as one is cognizant of the structural factors, we think that these cyclical unwinds are possibly a good opportunity to increase allocation to equities. So that's the way we would look at it, that it is in a fair values plus zone. Things have heated up a bit in the last 3-4 months, but we still are constructive on equities over a medium-term perspective.
All right. Hi, Harish. Good afternoon. Well, as you're speaking, it seems the markets are sensing that we're going to be hearing a a dovish RBI governor tomorrow? Because as we speak, the markets have moved to the high point of the day. I don't know how that's going to happen. Brent crude prices continue to move up. Now we're almost at around $87 per barrel. So let's see how that goes. But Harish, I recall in one of our interactions, you were telling us about banking profits. As a percentage of the GDP, it's at the upper end. So maybe, in fact, banks were getting fairly valued as a total sector out there, as a sector. And the other point you made was some of these new age themes are looking interesting, but you rather not just buy one. Maybe if you want to look at it, you look at it as a basket. What's your view now? Because the banks, well, they seem to be under some pressure because of NIM compression. Well, some of these new age themes are making the right noises. How do you approach both of them?
So, Nigel, I think the view remains the same, what we had discussed possibly a month back, which is primarily that, we tend to take a longer term view on a lot of these trends. And as you rightly recall, banking profits are close to about 1% of GDP, which is the highest that we've seen in the last 25 years. Almost all sectors are cyclical. Banking is definitely a cyclical sector, and close to the top of the earnings cycle, one has to be really mindful that you can have possible regulatory action, possible competitive pressures, etc., which can try and blunt some of these, if quote unquote, say very elevated profit levels. And therefore, which is why, we have a stance on the banking side. We have a lot of banking stocks in our portfolio. It's not that we don't own them, but relative to, say, benchmarks, etc., we are slightly lesser tilted towards banking. With regards to new age businesses, I think, clearly there has been some kind of positive momentum in terms of price action that we've seen in the last 6 months or so. But more importantly, I think managements have started to walk the talk. The whole of last year, they had gotten the message that they have to bring in profits. But I think the bigger message was to bring in cash flows, which were positive. And slowly, I think we are starting to see that as a basket. A lot of promoters and companies, gravitating towards that. It's also important, in my opinion, that the one negative of these new age businesses is that the skin in the game for the promoters is very low, and therefore there is an entire cap table, of the existing investors, primarily made up of venture cap, private equity kind of investors, that needs to get through a complete reset, and we need to see some stronger hands get in. I think that process is still awaited. We still are, some time away from that. But at least on the fundamental thing, it's kind of gratifying that a lot of companies have kind of moved towards profitable growth rather than growth at any cost, which was the mantra for a lot of these new age businesses, say, a couple of years back. And so, which is why we think that, a basket approach is possibly better off while looking at new age businesses in our portfolios.
Harish, thank you very much for joining in. Have to leave the conversation here for now. Have a lovely day. Get into a break. On the other side, we'll get you a check on what Dealing Rooms is saying in our segment, D-Street Chatter. We also get you a few BTST calls from our experts.
Well, the bulls are definitely sniffing that tomorrow both the outcomes are going to go in their favor. One is the RBI policy meet, the second one is the US CPI data. Just take a look at that. We're on the verge of almost moving towards that 20 DMA. The crucial mark on the upside is 19,650. If we can get close to that mark, the bulls will feel they have a very, very good day. For the time being, though, let's go across to Nimesh. Nimesh, what a day, right? Tell us, what are you picking up in D-Street chatter? Is this buying? Is there some covering of shorts, or what is it?
And Nigel, the sharp up move in the last half an hour could be the reason that there is a small basket, market at close basket buying at a leading FIDs. So that explains a big move in the large cap names in the last half an hour of trade. Otherwise, it was largely a range-bound day of trade, consolidating with a negative bias. Pocket, in terms of flows, I've been saying this for the last minute, is not that maybe some bit of selling has crept in from the larger FIs, in the cash market. Even in today's trade, in terms of sectors, the one space which is underperforming or there is selling pressure is the private bank stocks. That seems to be the third day running that there is selling pressure. On the other hand, some bit of buying seems to be emerging in the large cap technology names. So again, the feedback is there is delivery based buying in some large technology stocks in today's trade by the larger institutions. From a technical point of view, again, we've been stuck in this range between 19,200 on the downside and maybe 19,800 on the upside. So any decisive move has to happen beyond that levels. I guess the policy tomorrow could be very interesting and very important to track. Again, the street is expecting a status quo, but there is a small murmur of maybe a surprise as well, which can come from the RBI, and that could be a big reason for the large move in the bank stocks. So that's something to track tomorrow, and will be very important for large private bank stocks as well as for the bank Nifty. But broadly, I guess the last half an hour move today could be attributed to the fact that there is a small market at close basket buying at a leading FIDs.
Okay, that's the overall market sentiment, and that sentiment has definitely picked up in the last 1 hour. What about stocks, Nimesh? What's on your radar?
Hi, Surabhi. So, the trend of blocks continues. So, the first stock on my list today is Varun Beverages. There was a large block deal. The stock has been consolidating, but nearly 70 lakh shares changed hands. And I believe the promoter entity was a likely seller in today's block, and there was a single buyer. So, the disclosures could be quite interesting in Varun Beverages today. So that's the first one. The second stock is Suprajit Engineering. Small stock, not been discussed much about, again, consolidating of late. But there is an analyst meet next week, but I understand there's going to be a large block as well in Suprajit very soon. So that's something to track in that stock. The third stock is Bandhan Bank. Soft in today's trade, but for the last few days, there is cash-based buying coming in. I understand one of the domestic AIF is an active buyer accumulating at these levels in Bandhan Bank. So that's the third one. And the last stock is Orient Cement. The entire mid-cap cement pack is back in action. A lot of volumes as well in that stock at an HNI desk. I understand some large HNIs are quite active in the stock as well, and hence a big move. In fact, this month, the stock is up 30%. And even in today's trade, buzzing on huge volumes, that is Orient Cement.
Well, thanks a lot for that, Nimesh. I recall we had the management and they said in the next few months they're going to outline growth plans. That's something that they haven't done, and because of that, they were trading at a sharp discount. I visited their plant as well in Hyderabad, and the management of Orient Cement said, our time has come, we're going to lay down those big numbers, we're going to lay down those expansion plans. It's up, I think, actually 40% from the recent lows. Just pull up the last 1 month chart, you'll see big move on that one. So Orient Cement doing quite well. However, in the last few minutes, just pull up a Dreamfolks. I think that stock should come up for you. Yep, I think the results actually have just come out, and Dreamfolks should come up for you on the screen. The stock has moved to the low point of the day. It's down close to 15%, and volumes are massive out there. It's actually down close to around 18%. Let's try to look into these numbers. It appears the street has read that very, very disappointingly. So for the time being, I think it's a miss in comparison to what the street was working with. Maybe it's an operational miss. We'll try to get few numbers up for you, but these numbers haven't gone down. Just in the last few minutes, we had the numbers.
Revenues are up 66%.
Right.
But margins are at 6.5% versus 12%, which means despite a 66% top line growth, the absolute EBITDA has fallen 10%, leading to a very sharp contraction in margin. Margins have halved, and profits too have come down by close to about 3% odd. Looks like,
Rima, there's one cost out there that has gone up drastically. That's the employee benefits cost. Now, that's at around close to around, I think, it's up to 7 crores odd, which compares with around 3 crores. So that's one of the notable costs that have gone up. The cost of services, in fact, have gone from around 13 crores to around 23.8 crores. So that's the problem pocket, actually, because it's taken away close to around 10 crores from the EBITDA front itself. For the time being, the stock is getting hammered as we speak.
It's also up 75% year to date. So this has been a big outperformer because it's also a play on travel. It's an airport service aggregator kind of, company where I think the credit card spends get converted into points and you get lounge service, etc. So Dreamfolks has had a dream run, 75% year to date. And now on the back of disappointing operational performance, the stock is getting slammed.
Indeed, margins come in at mid-single digits in comparison to double digits. Street doesn't like it. It's selling off. It's down 18.5%. We'll try to get you a little bit more clarity on these numbers. For the time being, let's get in Mitesh Thakkar. Mitesh, what are the trades you have for us? Buy or sell trades?
Buy trades, given the fact that the recovery has been good. Coforge, and again an ID name which we have been trading in the long side is a BTST. Coforge, I would recommend taking a BTST with a stop below 5,020 for targets of 5130. And the other one which I like is Dabur, which on the intraday charts is reversing well. So that's a BTST with a stop at about 568 for targets of 570.
Okay, got that. Thanks, Mitesh, for the calls. We'll see you again with the markets tomorrow, bright and early. But for the time being, let's focus on one of the key reasons that we've seen this massive recovery today. At least the equity market seems to be pinning its hopes on a dovish policy outlook tomorrow. Anyway, the expectation is that there'll be no change in rates. But maybe the market's feeling that the RBI governor will not sound too hawkish when it comes to the commentary. Let's straight away go across to Lata. What is her sense? What is the bond market indicating right now? And what should we watch out for? Here's Lata with all the details.
Well, as the poll indicated, nothing is expected in terms of rate changes or stance changes. So what will you watch out for? Well, the fundamental watch of the market is on the inflation figure. Because of this vegetable inflation, food inflation for month of July, August is going to be very high. So now just look at the RBI current forecasts. For the current quarter, July, August, September, their forecast was 5.2. The market expects they will take it up to 6% at least. For second half, that is starting from October, the current forecast is 5.3. Because the base has moved up, Reserve Bank may have to take it up to 5.4 to 5.5. And for year ahead, that is April, May, June next year, because you're always setting the rates according to the year ahead inflation. At the moment that stands at 4.5, the fear is it could go to 4.7, 4.8. Now, these are the numbers the markets will watch. If it's as high as this or a little higher, the market's going to consider it a hawkish policy. And then the wording. Do they in any way indicate that food inflation could become a generalized inflation? Those words will be watched out for. Or will the words "we will look through" be watched out for? That would be deemed, dovish if they say "will look through." Usually the words will be "we intend to go back to the 4% inflation target, aligned to the 4% inflation target." The emphasis on that word will be watched. Then on liquidity, at the moment the market thinks we are just about right. If Reserve Bank indicates no, we are in a withdrawal of accommodation, which will mean we will use some instrument to tighten liquidity, will be taken negatively. But the point is, at the moment, the market is already sitting as if there could be a rate hike. If you look at the swap market, there is a 50% chance of a hike before December being priced in. So chances are that if that doesn't materialize, that level of hawkishness, you could actually see a rally because the market is sitting, waiting for a hawkish policy. So let's see how the wording sounds.
Lata, thank you very much for your insight. By the way, Europe continues to hold up pretty smartly. The CAC, DAX, currently higher by more than 1%, 1.25% rally on them, while the FTSE has gained close to about 0.8%. So the strength, there is support coming in from the global market. We'll slip into a break. On the other side, we'll be joined by market expert Anand Tandon. Stay tuned. Welcome back. Anand Tandon is with us on the show. By the way, Berger Paints numbers are up for you on your screen. Pretty good margin improvement, 18.4 versus 14.7% in terms of margins. So we're looking at a more than 350 basis points margin expansion. A bonus issue has also been approved. 1 bonus share for 5 that you hold. The stock is ticking up. We've seen a big fall in crude prices, so margins have expanded as the input price for Berger Paints, that's crude, prices have, taken a slide, at least in Q1. Revenues are up close to about 10% on a year-on-year basis. As we told you, Anand Tandon is here with us on the show. Anand, wanted to get your thoughts in on Dreamfolks. Do you look at the company? They just reported their numbers. There is a line item in their P&L called cost of services, which has gone up significantly, putting a lot of pressure on the company's margins. So despite strong revenues and a 66% growth, margins for the company have come down to mid-single digits. So have you looked at the company and what's this cost of services for them? And what could explain a big jump up in them?
I'm sorry, I won't be able to answer that. I don't track that.
All right, what about Bharat Forge? Bharat Forge's numbers look pretty good. The company's conference call is currently underway where they are talking about improving margins. The outlook for the US business is also improving. Do you look at Bharat Forge?
Yes, I do. So the main issue with Bharat Forge always has been the kind of unpredictability in terms of what happens in their truck orders overseas, because that seems to be one of the major drivers. Clearly, it is well positioned in India, but the international market volatility is something that you will have to get used to. I had heard one of your earlier commentators mention that defense is going to be one of the drivers. Unfortunately, the defense part is actually in the private company. Of course, the forging business will come into Bharat Forge to that extent. There is some upside that is likely to be there, and I think clearly that's going to be the biggest driver. So, if you look at it as an auto ancillary play, perhaps it's a lot more volatile. If you look at it as a potential defense play, there is some optionality there. But the valuation is, of course, something that you'll have to get comfortable with.
Okay, markets are continuing its forward march. It's, practically back at the 20 DMA, just about 10 points shy of that. And as we're setting off for the close, some of the commodity stocks have done really well, actually. Metals, not just Hindalco. Look at JSW Steel. Coal India, anyway, we'd had the numbers tailwind. So basically, it's been a great day for commodity stocks.
Well, that's right. And, yesterday the reaction on Hindalco wasn't fair because actually the numbers were good. The operational numbers were good and the management commentary is even better. So maybe, hope is that China resolves itself because ultimately China is king of the commodity market. So, whether it's with regard to demand or supply. So we'll need to watch that space. And the exports out of China actually are moving up for steel in particular, which is never a good sign. So let's see how that goes. Hopefully that stimulus will take care of the worries. But Anand, we had a couple of numbers that flashed for our viewers, and Berger Paints, the intraday chart should come up for our viewers. It was trading in the red. Now it's almost moved into the green. The margins have improved by close to around 350 basis points. The top line, Anand, is up by close to around 10%, and profitability as well has surged up. Any view on Berger Paints? And from the paint pack, what do you like? Because you have this big player, Grasim, going to be commissioning their unit in a few months from now.
So the paints is a sector that has consistently performed well irrespective of how the raw material prices behave. Obviously, the margins keep fluctuating. And you could equally argue that the next quarter may not be as good as oil prices and input prices move up. But that said, among the entire consumer discretionary space, that's been one area that has consistently performed. Unfortunately, it now trades like an FMCG. You have to remember that much of the paint decision is not really made by the end user, but by the intermediary, the painter, and so therefore it's actually an industrial sale. For it to trade as it does in terms of the valuations is something that leaves me a little uncomfortable. But if you were to ignore the valuation, it's a sector which has delivered double-digit volume growth, one of the few areas in the consumer space which has actually double-digit volume growth. And from the perspective of the fact that real estate, etc., is doing well, as our other consumer durables, etc., all of which require the paints, the underlying business momentum is robust. The only thing that you can hold out against Berger or any of the paint companies for the matter is the price that the market is willing to pay for.
Okay, got that. Anand, thank you very much for joining in today's short chat. But thank you very much for being with us. As we're closing out, we are actually closing out on a high, pretty much the highest point for the Nifty, and what has been an absolutely dramatic recovery in the last 1.5 hours. You do have a lot of the commodity stocks to thank for it, and also consumers. But let's not forget that even banks, and that was a big part of the market that was dragging in the morning, banks also cut their losses, and that helped matters. So the tally on the Nifty is reading northwards of 19,600, very close to the 20 DMA. Big gainers include JSW Steel, Hindalco, some of the Coal India, of course, as you mentioned, ONGC, these are the commodity plays. Then you have some auto names like Tata Motors and M&M that did well. And consumers, like I was saying, ITC, Titan, these are important stocks to look at. Of course, with some help from stocks like Reliance and L&T. So a pretty good session. Dr. Reddy's, that was actually the Nifty gainer of the day is Dr. Reddy's. Impressive show by that one as well. Actually, the Nifty loser is Divi. So Divi is on the bottom of the tally, and Dr. Reddy's right on top. Interesting divergence.
Numbers
there
on Monday for Divi's.
Yeah.
Okay. Let's quickly run you through some of the mid-cap movers. On the way down, Mishra Dhatu post numbers ends down close to about 7%. Adani Wilmar on fears that, or on the possible supply from the promoters. Adani Wilmar is down close to about 4%. You had weakness in Utkarsh Small Finance Bank. Cuts coming through in names like Dreamfolks post its numbers towards the end of trade. In fact, locked in a lower circuit of 20%. IdeaForge, Brigade, GSFC, Prestige, PB Fintech. These are all the big mid-cap losers.
Well, from the broader markets, Reema, there were some of these stocks that were done and dusted, but they came back. So just to highlight a few of them, Ratan India Enterprises, stock was up 20%. HCC was up close to around 20%. You had Suzlon that was up close to around 5%. Dish TV was up more than 10%. So some of these companies, in fact, they were in single digits not too long ago, but they had a big move in today's trading session. That's not the Ratan India that we're talking about. Ratan India Enterprises, which is up 20%. HCC, Dish TV, you also had JSW Energy, that Reema mentioned, I think so, and Morpin Labs as well. Big up move is what we saw. And just throw in there a couple of cement companies. India Cements was up 6%. You had Sagar Cement that was up close to around 5%. And Orient Cement as well that was up close to around 8%. We said that post that, post the Ambuja Sanghi deal, some of these smaller companies, they could get excited. It seems on the back of cheaper valuations, they're seeing some bit of traction in today's session. Well, that's a wrap on Closing Bell, but you don't go anywhere. Our special offering, Mad About Markets, comes up next. And today we're going to be talking about the Bharat opportunity. Don't go anywhere.